So many people ask about the difference between term insurance and life insurance. In my opinion, when this life insurance was introduced to the world, there was only term insurance. There was no concept of whole of life insurance. But gradually, when the requirements increased and the people started considering that the term insurance premium paid, expecting the inevitable happening anytime, and luckily not happening during that time, the premium was lost. And it was not being able to decided that either the premium paid last year for term insurance was to be put in which part or which side of the balance sheet. As the time went on, the financial requirements have been increasing. Once the banks started giving the saving plans to the account holders, the life insurance companies also started considering that they can include a certain differences or introduce new attributes to the insurance that resulted into this new shape of whole of life insurance. Term insurance, the only benefit for this is that it is 5 to 15 times less in premium as compared to whole of life plan. It is only for a specific time period. That the easiest definition is that I am buying my death coverage, making nominee to my loved ones, considering 5 years or 10 years specific term for this plan. And if luckily I am surviving that time and not dying, that then these 10 years premium that I am paying on monthly or quarterly or annual basis will be lost. As compared to whole of life plan, that is also life insurance, but a bit expensive one. My purchase of 15, 20 or 10 years premium plan for my death benefit will not be lost even if I survive this time. Why? Because there is a saving aspect to this plan. There are certain funds involved which I will explain it to you later how they came into existence. But there are certain funds involved into this plan which actually accumulate your money, and your amount is being invested into these funds which are being selected by you separately, apart from the expense of the life coverage. Whatever the premium is separated from that particular amount of investment is being done on your selected fund given by the life insurance company, and those funds actually accumulate or aggregate your amount, and then you get annual profit on that, which is being called as the cash value of your plan. If you continue to pay the premium, the company is saying that you are buying a life insurance plan, whole of life plan for next 20 years, in which you have to pay the premium for 20 years, and then after 20 years you don't have to pay the premium till the time you die, then your this premium will be accumulated or multiplied into the certain fund, and that fund will keep on multiplying your amount, and at the end of the day when you encash your policy if you are alive, then whatever the cash value will be, then you are getting 90%, you are getting 4 times of whatever you are paying to the insurance company. For example, if you are paying $1 million, in 20 years you are getting 4 million out of that. So this is my experience of getting the premiums and getting the results after 20 years of regular premium payment. As far as this term insurance and the difference between whole of life plan goes, whole of life plan is much more considerable if you have amount of the premium that you can share with the insurance company, which is most reliable. If you are looking forward to invest anywhere, do invest in your whole of life plan, because whole of life plan is the most reliable, most considerable, most consistent annual income there is as compared to any other revenues that are being generated. For example, if you are planning to buy property for your in the long run for your loved ones, which is like a cheaper one. For example, you forecasting that certain property that you are buying for 10 million right now will be the cost will be at the price of 50 million after 20 years. Just giving you an example. And you are buying a life insurance whole of life plan, which is right now at the price of 50 million at the time of your death. Now you calculate both investments premium. Both investments premium will be hell of a difference. The difference between the both investments is like this. If you are looking forward to purchase one property that is 1 million dirhams at $1 million at this moment, and you expect this to be 50 million after 20 years, then you are paying 1 million right now cash. And if you are purchasing a whole of life plan which coverage is 50 million at this moment, and you are paying 100,000 per year for next 10 years, so the payment span is 10 years, where you can pay easily installments of 100,000 in these 10 years, and then at the end of 20 years you will receive a certain cash amount. You are not sure about that property whether that will be 50 million or not, but this either you talk about the cash values, definitely they will be 50 million, or either you talk about the death benefit, that will also be definitely the 50 million. So this is the assured amount of investment if you are interested to have, buy life insurance and nothing else. Thank you.